Welcome, I am Ibrahim Sani and this is Market Talk. The insurance world is a centuries-old business, yet they are continuously on the verge of reinventing themselves to cater for an ever-expanding technology world. Insurance technology is now at the forefront of this sector, a subset of fintech. Joining me to speak this and more is Kamaludin Ahmad, the CEO of Maybank Ageas Holdings Berhad, the parent of Etiqa Insurance Berhad and Etiqa Takaful Berhad. Welcome to the show, Kamal.
Thank you, Ibrahim.
Now, you're coming on the show on the back of posting record PBT of 810 million ringgit. This is a 34% jump from the year before that in 2015. I understand that the first quarter is below expectations, but with all estimates coming in, at least Bloomberg for that matter, is expecting you to continuously record another record PBT for this year. Is there something special in the magic sauce of the insurance business of Maybank?
Wow, that is correct. We had a 34% jump last year. But just to put things in perspective, we went from a dip in 2015 to rebound in 2016 to 810. And despite the sluggish first quarter for us, we had picked up really well for the rest of the year. Up from April to August, where we've been growing about 20 to 25% every month. And I cannot disagree with Bloomberg. We are looking at a much better year this year.
Zooming out from your company towards the parent, right now, insurance business of Maybank contributes 10% roughly for operating income and pre-tax income for 2 or 3 years consecutive. But the number that I want to focus on is on the revenue of your group, which sees a contribution declining year on year from 8.2% in 2014 to 7.4% in 2015. Last year, you contributed 6.5% to the revenue to the group. Is this a worrying trend for the insurance business of Maybank?
It is not. It is also partly because how our insurance numbers are reported in the Maybank group level, because there are 3 lines really on the bank side. You have the interest income, the non-interest income, and also the insurance profit from insurance business. The profit from insurance business is really just premium minus the liabilities. This number can go up and down depending on the yield curve, because the actual liabilities is computed, discounted back based on the MGS yield curve. So when the yield curve goes down, there's an impact there. However, for our contribution also goes into the non-interest income.
Which is captured by the CFS segment, which of course saw them jumping quite substantially, at least for 2016, from 30-odd% to now 50 or 49%. So does that mean that the idea of inculcating the insurance business and entrenching that arm or segment into the entire group is now well underway for the Maybank
pretty
business?
much well underway, and it's just going to get stronger. That's my personal view, and we've been working very hard towards this. Many things are being put in place and clicking really well. We saw a lot of traction in the past 2-3 months. Just to give you some example, 2-3 years ago, on the regular premium business, which is very good for the future value of the company. Regular premium business, we used to do about 10-12 million a month. Last month alone, we did 30 million.
Yeah, and this is again on the back of holding a substantial size in the market share. In fact, the Takaful business, you're half there in general Takaful, and in family Takaful, you're about 18 or 20% there as well. Do you think that the time is right for you to capture the conventional business as well? Because while the Takaful business, you're very well much capitalized in the market, the general insurance business perhaps is something that is still at par with the other competitors.
Yeah. On the Takaful business, we are really kind of riding on the shift towards Takaful from the general Malaysian public. And at the same time, we are also putting good things in place to make sure that we can capture this shift in the trend. But on the conventional space, for bancassurance, we are growing really well. What we are kind of missing out on is really on the agency space, where we've not really been growing that fast. There are a number of things that we are doing at the moment to make that better. We are making sure that the agents are being helped in the way they do things. We provide them with a straight-through processing where they can come across very professional when they see the customers, and making things easier for them to close a sale.
This is something quite interesting because 90% of online insurance sales is registered by your company.
Yep.
10% is for the rest of the guys.
Yes.
Does this mean that by you invigorating your business through online sales, that would mean that agency business would have to go down?
Yeah. If you just look at the surface, it may seem so, but what is happening is the learning that we've drawn from the online business help us to make things easier for the agents as well. Because when you see what happen when people go online, they try to purchase. They try to find a space where they can purchase things easily. So we keep learning about how to make things simple for the customers there, and whatever learnings that we got there, we apply to our agency business as well. So the straight-through processing and everything else, we make it easier for the agents as well. So it's not like one over the other.
Like a zero-sum game.
It is not. It is not, because it's still a growing cake, and we try to capture as much as we can in the market.
And of course, with this in mind, if people do go to purchase their insurance online, motortakaful.com, for instance, and many others, wouldn't this bring about a better user experience, particularly when the consumer now knows what he or she is getting into? Everything is there. They can select or deselect whatever and cut the middleman, if I may use the word, for these agents out there. Do you think that the trend is heading in this direction? Not to say that the agency business is depleted, but is this the trend right now?
It is for the simpler product. So I'm talking about, when I say simple, I'm referring to car insurance, personal accident type of insurance, as well as some home insurance and travel insurance. So for this type of business, there's a tendency of the customers going online because it's simpler. And for the agents, businesses like travel insurance and personal accident, they are not so keen to sell because the ticket size is pretty small. So the income to them is not that great. So it doesn't really make sense for them to do that.
Okay.
However, for the products that require a little bit more of explanation, and where the customers or the prospects would like to ask more questions, then this is where the agents can add value to the.
Would family insurance and family Takaful fall into this segment where you need some sort of explanation?
Yes.
All right, still on the issue of consumer experience, but we'll speak about that after this. Don't go anywhere. Welcome back. I'm Ibrahim Sani, your host. You're watching Market Talk. Today I have with me a treat, actually, a CEO of Maybank Ageas Holdings Berhad, Kamaludin Ahmad. Of course, Kamal, the story of insurance is that you're re-engineering yourself, trying to make yourself a little bit more relevant to the technology world, and more so when the topic of insurance technology is now here, Insuretech, if I may use the phrase. And of course, when we open this interview, it is a subset of fintech. This is where people are now trying to understand this business better. I can try to ask 10 guys out there right outside the studio if they know fintech. 10 of them probably say yes. But Insuretech, you'll be hard pressed to get just one guy to understand that particular term. Let's start off with the explanation of what insurance technology is, at least from the perspective of Maybank Ageas.
Okay. What we are seeing at the moment, because we always open ourselves to any approach or any suggestion for new ideas, and on weekly basis, we have some startups seeing us promoting some idea. What we've been seeing so far is mainly on the Insuretech, where it's related more towards trying to sell online type of business, or telematics type, where you can actually track, or you can track the driving behavior of your customers. Yeah, but in both instances, there are challenges. The first one, when it comes to sales, insurance is really about building trust as quickly as you can, because this is a business of trust, and you got to be there when something bad happens. Yeah, so but the challenge is not, you don't get involved in an accident, every other month, or maybe not even once a year. Yeah. So how do you build trust quickly? What we need to do, or what we are looking for, is ideas where you can sell some coverage where the incident of a loss, most probably a small loss, can happen pretty frequently. For example, you purchase something online and the delivery doesn't reach you. That can happen maybe 1 or 2 times a year, depending on how often you purchase
things online.
And if you can make sure that you pay that claim payment very quickly, then you can build trust really quickly. So I think Insuretech needs to focus a bit more on that, when they come to see us. Yeah?
Right. Yeah. I don't think anyone would disagree with you on the upside of Insuretech, particularly on better risk profiling of the consumer businesses, like online companies and so on. I think the problem here is on trying to find the right partner to deliver the telematics system, and finding the right data points out there. And is it fair to say a company as big as Maybank Ageas, with 2 big further companies as your subsidiary, Etiqa Insurance and Etiqa Takaful, have yet to secure a partner in trying to deliver this service to your customers?
We actually have. We have got a tie-up, and in fact, we know of 2 providers out there. Yeah, we've tied up ourselves with one, and the idea is really, place a kind of tracking device in the customer's car, and then you got to know, whether they do hard braking, hard swerving, or sudden acceleration and so on, because that will give an indication of how good a driver this person is. But the challenge is, why would anyone allow an insurance company to place something in your car?
It is against the, not only is it violating privacy, it's also a gross way of trying to determine the person's liberty in trying to determine whether or not that person has the right way of doing things, driving better or driving worse.
Correct.
So how do you overcome this challenge?
So in short, you wouldn't allow an insurance company to do that.
Yeah.
I myself wouldn't allow any insurance company to do that to my car.
You yourself as a customer, yeah.
However, for corporate customers with a sizable fleet of cars or vehicles, it is in their interest to put this in all their vehicles so that they know whether their employees are driving their vehicles, as best as possible.
So we're talking companies like logistic companies, delivery companies, that kind of stuff.
Yeah, and not just that, even companies with SMEs with 3-5 vehicles, it still makes sense for them to do that, right? So there's an opportunity there. And it's a win-win, because it will inculcate better driving behaviors in the employees. So it's good for the employees, it's good for the company, it's good for us, because we may be able to reduce the insurance premium for the customer, and it's good for the society as well. Yeah. So that's one. Now the other thing is, again, I wouldn't put it in my own car. But I got a age-driving son, so it does make sense for me to put in my son's car.
Or any other dependents that you have. Yeah, I guess that would be some of the key aspects for this business. But we'll take a short break. When we come back, we'll discuss more about the insurance industry. Don't go anywhere. Welcome back to Market Talk. I'm your host, Ibrahim Sani. If you have not heard of Insuretech, well, this is the place for you to understand better about the term. I have with me Kamaludin Ahmad, the CEO of Maybank Ageas, the parent company of Etiqa Insurance Berhad and Etiqa Takaful Berhad. Of course, these are the consumer or household brand that people know, Etiqa. Do you think that with Insuretech, you can deliver better customer experience and on top of that, deliver innovative products? When we read about this, there's this claim that insurance companies can give better products out there. Do you think that this is truly a revolutionary thing where you can actually roll out these products that could be beneficial for the customers?
I truly think it can. However, it requires a change in mindset. For many years, insurance company has always been focused on distribution, and we don't have direct reach to the public. So that's why there's a lot of intermediaries. It's all about building intermediaries. Yeah? However, and to the certain extent that you leave the trust bit to your intermediaries to do. Yeah? But with online, with Insuretech, what we need to do is the change in mindset. The focus should be more on the companies themselves being able to deliver that trust, where the customers can feel right away and in a reasonably frequent manner that this is a company that can trust, so they can trust, so that you can actually make available more of this product. For example, we are very focused on the claim side. For travel insurance, there's a flight delay compensation. So what happens is we tie ourselves up with international flight data. The moment a customer flight is delayed after certain hours, we are notified straight away. And what we do is we can then bank in the compensation money straight to the customer's account and then text them, sir, we note that your flight is being delayed. In record time, of course, when we've bank in this money into your account. And of course, this can only be done under the Insuretech system model because of the telematics and such. Yeah. But this is something that we do ourselves at the moment. But so we'd like to hear more of this from Insuretech aspirants out there to come to see us where they have this. Another element is, of course, Internet of Things, with various products, devices, stuff, trying to provide various data points for you, your company, and in trying to better risk manage or risk profile the customers. Yeah. Again, the upside is okay, everybody would agree that this would be good for the business, but how does this come across towards the layman? I mean, if you put sensors in my house, my light, my fan, my aircon, whatever, should I feel worried? I mean, of my privacy being transgressed? I totally agree with you. I just wouldn't allow that to happen to my own house. Yeah. But unless it is very clear to me what's in it for me. Yeah. What's in it for you, and whether you have that trust. Yeah. So that's why I keep mentioning about this trust element and what's in it for me. If we can address these two, then I think that's game on. Yeah. If not, then there would be anything. So it's about figuring this out, and I think we'll be able to figure this out eventually. No, we'd be remiss if we didn't talk about the market of the insurance business. Right now, Great Eastern, Prudential, Tokio Marine, many others are trying to pare down their stake in local insurance companies, and this, of course, comes on the back of a regulatory requirement issued by Bank Negara saying that these foreign ownerships must pare down. On the financial side, they could raise a lot of money. Great Eastern was quoted to could fetch up to $1 billion. Prudential, with a 30% sale of stake, could also raise about that much. What would be the point of view from Etiqa, from Maybank, when these foreign ownership trying to pare down their stake in local companies? I don't foresee much of an impact. If any, I think the impact to us will be maybe mildly positive, if any. Mainly because there's a little bit of uncertainty among the distributors. Okay. So possibly.
Would this impact their premium charges for their customers?
No, I don't see that happening. I think other than that, that's why I think there's probably not going to be any impact. If any, it's going to be just slightly positive.
Some of these foreign insurance companies, their clientele would be mostly corporate customers, business type customers. Do you think that these kind of clients would now look for more certainty and bet on local insurance companies like Maybank?
I don't really see that happening, because for most people, because these are mainly life insurance companies, and they have customers with long-term contract with them. So people don't simply, cancel your insurance policy to go elsewhere. Unlike general insurance or general Takaful, where people have to renew on yearly basis. So I don't see customers doing that.
When Bank Negara stated that foreign ownership should be pared down, they said, and I quote them, that this could better serve the interest of the Malaysian financial system. Can you give a little bit of background? What do they meant on this?
I'm guessing here. So what I think they mean is, see, for many of these foreign companies, they have stakes, sometimes even 100%, and this has been grandfathered for more than 20 years now. Because the first move to get the foreign owners of these foreign companies to divest their stake, to lower their stake to local shareholders, was back in the 90s. Yeah, 90s. So, but somehow, many of them managed to get agreement where, it can be grandfathered. Yeah? 20 more years have passed, and
nothing has changed.
Nothing has really changed. And from the regulator point of view, they would also like to see a national champion. So, that's probably why.
Can it be said that the size of Maybank Insurance is too big, that you can be a monopoly, can be argued to be a monopoly, and that would be bad for the insurance sector?
If we become a monopoly, that may be bad, but as it is right now on the general insurance, on the Takaful side, combined basis, our share is about, maybe almost 30% combined, general and life and family. But on the life insurance and the conventional space, our share is, just about 7-8% combined. Yeah? So, to be a monopoly, we're still long way away. But at the same time, we are also, our way of doing things, we are not really about pushing sales, to be frank with you. What we are really focusing on is how do you be the best at what you're supposed to do. And for insurance company or a Takaful operator like us, it is about being there and making that claim settlement as quickly as we can. So that's the focus. Now, if you are focusing on that, and because of that, people like you and they buy from you, I think that's not such a bad monopoly, if you want to call it that.
And of course, Etiqa as a brand, to bear testament, you have won various brand awards for this particular brand. I guess that would be some reflection or feedback into whether or not you're doing the right thing or not.
Yeah.
Well, we have to end there. I've been speaking to Kamaludin Ahmad, Maybank Ageas Holdings Berhad CEO, the parent company of Maybank Etiqa Etiqa Insurance Berhad and Etiqa Takaful Berhad. That wraps up this episode of Market Talk. Be sure to follow us on Facebook, Twitter and Instagram at 501 Awani. Don't forget to download our app at the Google Play and the Apple App Store. I'm Ibrahim Sani. Thanks for watching and goodbye.